Hi, Shan here again.
Hi, Sean.
Ah, uh, Darren, I would like to know about this NFP news because I've been observing the market past 3 months. Where, yeah, past 3 months, I'm new to this. Past 3 months, I've been having a look at the market. Whenever there's news from the Fed or something, they try to make $20 to $40 up and down. I just want to know why do they do. I just want to know what happens at this point of time and why do they do that.
Okay, so let's find an example then. Can you give me something to work with, like a pair or something?
Gold on Tuesday, I believe.
Gold on Tuesday.
Yeah, Tuesday or Wednesday, when the Fed had a release of the printing of dollars till 2022.
On Wednesday this week, eh?
Yeah.
Okay, so Wednesday was the 10th, okay? So the 10th of June was over here. Do you know what time that news was? I think it was this candle here, actually.
The big green candle.
Okay, so it was this big green candle here.
Yeah.
Okay, well, let's look at it from a perspective of what I've showed you, right? Okay, so that is now the candle where the Fed changed, or not changed, just the Fed news. And this is the reaction candle from that news, okay? So what I was saying in the previous recording was that regardless of the data that is released, so whether it's interest rate that goes up or interest rate that stays the same or the interest rate goes down, the reaction or the movement of gold was going to be the same that it was. It just so happened to have done this in 1 4-hour candle. So this could have been, say, 3 4-hour candles if the news wasn't released. So the news just increases the volatility, because you can imagine institutions have placed their orders. Now all these retail traders also come and they're looking to buy or sell or whatever the case is. In this case, it bought. But where did it go to? Well, price went to our order block here. So this is our order block over here. Okay, and if you had followed the order blocks from the bottom over here, so here is our first order block over there. And also if we look at our daily chart, you'll see that this order block is still respected over here. So I'm just going to put that as blue. So you know that's a daily order block over here. On this candle over here is our daily order block. When price came up, tested, bounce, test, bounce, test, bounce over there on this level. So if we look at that area on the 4-hour, here is our 4-hour order block inside our daily. Okay, so that is our 4-hour order block inside our daily. Can you please mute your mic, whoever else is not muted? So that is our 4-hour order block inside of our daily order block. And we also have a fair value gap that was closed over here. So that fair value gap was closed. This order block pushed price up, and additional fair value was created over here and has not yet been closed. Okay, but another fair value was created over here when this candle rallied up, and you can see that price closed that fair value with this candle over here. Do you see that? There was fair value because price was bullish. So price bounced off the daily order block at the 50%. So here is the 50% level of the order block. So that is the halfway point of the order block, right? So the price rallied, look at that, 50%. Boom.
Yep.
When price rallied off the 50% of the daily order block, why did it rally up? Well, it rallied up because there was an imbalance in price created over here. Okay, so this price imbalance had to be balanced because it was an immediate balance. So when price closed that balance, there was no longer a balance. So it created an order block to push price up further. Then I said that this fair value gap over here was created and price wicked into, like I've marked up before I showed you all of this. Here is that area of price. So our next order block over here, responsible for 1, 2, 3, 4 candles, 4 green candles before the news was released. Okay, so there is our order block created. 1, 2, 3, 4 green candles. So it's a strong order block and it's gold. So gold is volatile, as you know. So gold created this 4-hour order block above this fair value gap and price rallied up. Okay, price wicked into the fair value gap and rallied up again. But notice that price closed inside of our 4-hour order block. And what did it do? Created another order block over here. And price wicked in and tested our order block. So do you remember I said you can take an entry off the 50% of the order block or the opening candle of the order block? There would have been your nice entry.
Yeah.
Or if you had followed the order flow, you could have taken an entry, say, over here, or maybe at the 50% of this order block, or at the opening of this order block. So regardless of news, if you are following order flow, you're gonna be profitable. So I'm not telling you now to go and trade news. I'm telling you that you must have your orders, either have taken them a day or two before a news release in the right direction, having followed the order flow, or if you do have trades and you're unsure, either close them before the news because you don't understand these concepts I teach, or have your stops at break even. You know, the point of this is to not lose money, because we sit at the PC or the phone and we're managing risk all day. That's all we're doing, because we are retail traders, and the only thing we can do is not lose. So the aim of the game is to not lose. The aim of the game of the market maker is to make money, and that is there at the expense of us, the retail traders. So their goal is to stop us out and sell to us buyers, or buy from us sellers, you know. So that is the idea and the mentality of what trading is. And many people don't understand this. The quicker the mindset that you can have to shift your idea of trend lines, support, resistance, supply, demand, harmonics, all of that garbage, you will see what is actually happening on the charts, because banks don't trade with charts. Banks are what move markets mostly. So there's institutions like a hedge fund will also have a large amount of money to move the market, but not as much as banks. And banks don't trade with candlesticks or line charts, or they don't have a MetaTrader terminal. They are the people who move money directly, the direct order flow of money between borders, countries, governments. So that is how money is moved. They don't sit on a chart and trade. That is hedge funds and things like that. The candles that you see are just the byproduct of what has happened, the transactions from the banks or the hedge funds or whoever. And someone asked me, another question was, do the retail traders and the banks and the institutions all trade against each other? And the answer is yes. So you can think about it as, say, the Bank of America and the Bank of England are needing to either buy or sell GBP USD, because they want USD for GBP. So the one will buy and the one will sell. So that's just how it works. You can't both buy. One has to buy, one has to sell. So the same can be applied to any concept, any commodity, any crypto, any stock. The same rules apply. Imbalance in price, institutional price levels, order blocks, whatever I've showed you and whatever I will show you will apply to anything. Anyone else got a question?
Thank you so much, Darren.
Ravi Kumar, you had a question, I remember, that you sent me on Telegram. Speak now or forever hold your peace.
Darren, Roger, I just want to ask a quick one,
Yeah.
Darren. Darren, you mentioned that the same happens on crypto markets as well, in terms of what you.
Let me see if I can pull up a image for you here on TradingView, because I don't have a broker that trades crypto. Bitcoin?
Oh, Bitcoin.
I don't personally trade it, but the same can be applied. So immediately, forgive me, I don't use TradingView, but the same can be said that here is a fair value gap on Bitcoin, right? So immediately we can see that, and we can see also, so here is that fair value gap. So when price rallied up, it rallied to at least the 50% level over here before going down. Okay, so people are seeing that as a bullish action, so the retail traders are buying this up, and when price gets to that 50% level, the institutions take that down. Okay, so let's just look at previous history over here. Any particular point in time that you would, okay, well, if you don't have a particular one, look at this. Here is an order block right there. So that is an order block. Where did price come to? It bounced off of this order block. Okay, again, another order block over here was formed to push price up, and you can see the reaction of that order block until that order block was broken. So this order block has been broken over here. So this over here is our source candle. That is our source over there. And this is our breaker over here. Like that. And if I change the color to yellow, that is our breaker. This was an imbalance in price. So that imbalance in price hasn't been filled yet, but you can see that there was reaction from when basically 90%, if you've watched the videos on the imbalance of price, you will see that 90% or 50% can run down the liquidity, and you can see that happen over here. So when price came down, bounced off this order block, what did it actually do? Well, essentially what it did was there was retail buys over here at this level. So where this blue line over here, you can imagine people are buying. So there's stop losses sitting over here for the buys. And the same if we move it over, that is support for retail. So what did this candle do? It raided the liquidity of those stops, closed these fair value gaps over here. There's a fair value gap over there. So you can see there's a fair value gap on Bitcoin, raided those stops, closed this fair value gap, and bounced off of this order block. So there's another, let me just make that purple. And there is another fair value gap over here. So let's see if price has reacted off this level. Fair value gap. Price has not closed off of that fair value gap, but price tested our order block over here again. Okay, and when it tested this order block, it bounced up. So do you see
That order block, yeah, Darren, that order block would still be valid because it's not been
violated. Correct.
Violated. It's just wicked in there and then bounced up again.
Correct.
That is very much a valid order block.
Exactly. And if we look at previous chart data, I mean, the order blocks I show you are all over. It's just a case of defining which order blocks are stronger than other order blocks. So when you have an order block, you want to see a large move to the upside. So like this order block over here, you can see that if I pull price across from that order block, because this order block was responsible for this big move to the upside here, right? Okay.
Correct.
So if we pull our order block across here, look how price comes into our order block. Okay, I don't trade Bitcoin, but I'm just showing you that what
that's quite clear, Darren. I follow.
Is exactly how it is. Okay, and if we see here when price came, there was fair value over here, and price closed this fair value by going up here. Okay, and although this over here is an order block, it took 1, 2, 3, say 4 candles to create, it's still an order block. Okay, so when price came in there, it rejected that order block. Okay, there's a fair value gap over here. When price came to that fair value gap, it ran down. And you can see that there is liquidity sitting over here because this is where retail would be selling. Well, you could even put it so far as to put on the candle closes, but essentially we have a point of liquidity sitting here because of this. That is resistance, retail resistance. So you can imagine the stop losses sitting here, price going down, creating low lows, price breaking up, wicking above to take out the stops that are sitting here, and price going down. This liquidity was created, price closed this imbalance of liquidity, and now we can see what's happening.
Great, thanks a lot.
When Bitcoin first came out, there was a lot of gapping and things, but as it's gone on through the years and now people trade it more, it has sort of stabilized and become a sort of normal way to trade currency. But yeah, you can definitely trade what I teach on anything, including Bitcoin. Anyone else got any questions? David, do you have a question? Matesh, nothing? Yes.
Tell me, Darren, will you be taking us through some videos in the future around risk management, lot size, stuff like that as well?
A lot of people really ask me that, and I feel like it's not really necessary because there's so much of that on YouTube and pretty much all over. But yeah, I think it is important. People are requesting it quite a lot. I just feel it's a very beginner thing to know, and like I don't really do beginner stuff, so this is I guess I could. A lot of people, including you now, also requesting it. So I think I will do that at some point, but I need to just get out my concepts on the 10 videos that I promised. So I want to do that first before I think about doing risk, anything to do with risk.
No problem. Thanks, Darren.
No one else got any questions? You asked for another Zoom, so here it is. Here's your chance. Ask me for a pair, an analysis, what? Mark up a pair. Come on, guys.
Darren, for a beginner trader, getting into the market and starting to apply your principles, do you stay with one pair? Do you do two pairs? Are they specific? How does one really choose which pairs you would want to focus on?
Well, that's up to you entirely. I would suggest picking a pair linked to the USD because it is a very liquid market. So
Yeah.
I would suggest picking no more than 2 or 3 pairs at most, maximum. Maybe start off with 1 or 2 pairs and then add a third when you start to get accustomed to how the strategy works. But even now, I don't trade more than, say, I'm not looking at any given week at more than 5 to 7 pairs. That's because I do what I do and I don't take 10, 15, 20 trades like some people do. I maybe take 3 to 5 trades a week, and that's it for me. I don't need to trade more because there's no point. If I just show you something here that you may or may not know, is the fact that some people trade or can only trade with a 0.01 lot size, but all of these obviously mean something. So when you are trading, these equal to 0.10 cents per pip. So you can imagine you need like 1,000 pips to make $100. Okay, so the same can be said for 0.10, which is $1 a pip. So you would only need 100 pips to equal $100. And one lot, well, $10 a pip. So how many pips would you need? 10 pips. Same can be said for any lot size. You just divide it up or down or multiply it. And that is how you need it. So that is how I trade. I don't need to take 1,000 pips a week. You can live off 20 pips a week if you want. It's just the dependency on what your value of your percentage lot size is. So, and that's it.
Thanks.
you have a question?
I just came in.
Okay, well, this is a pair trade, and this is Euro NZD. So this is the kind of reaction I can be expecting come next week. And if we look at the daily chart, at some point I'm expecting this liquidity over here to be taken because there is a large 4-hour daily, order block sitting over here on the daily chart. So I expect price to come and raid these levels over here because there is liquidity sitting over here on these highs because that is retail resistance. So that will be taken by banks at some point, where it is this week or next week, it doesn't matter, or the week after or next month. We still need to see price close above our our daily order block here. So this is a daily order block, bearish order block, our last one, most recent one. So once price can close above that, we can expect a bullish movement. But for now, on the daily chart, the order flow is still bearish on Euro NZD. And if we look at the 4-hour chart, although price has closed on the 4-hour chart above our daily bearish 4-hour order block, daily bearish order block, our 4-hour chart already closed our last bearish order block at the bottom over here. This is a 4-hour order block that became our breaker because price closed above it. And you can see price closed above it, tested the daily order block, rallied back down into our breaker and rallied up. And where did it rally up into? Well, this is most likely, yep, an institutional price level of 76,500. So there was rejection at the 76,500 level. So if you are looking for a buy opportunity on Euro NZD, then this would be a potential area where you would want to look for a buy, because this is a 4-hour order block over here. This over here is a imbalance of price over there. That is a fair value gap sitting over there. And so when price, we can expect some reaction coming off here. Whether we close below or not, we'll have to wait for price action to occur. And this is a source candle over here. So we can see some reaction off that zone, and that is the 4-hour. The daily chart indicates that this level, there is still some fair value to be closed. Actually, price bounced off of our order block over here on this daily chart. So we can see some sort of pullback come Monday morning to the downside, I believe. So we can expect some reaction possibly coming in to close this fair value gap. And we'd have to wait for further price action to occur. But once that fair value gap is closed, I would want to try and see if I can buy Euro NZD. This is the 1-hour chart. And in the 1-hour chart here is a bullish 1-hour order block I'm going to mark as pink. So this purple box over here indicates our fair value gap, our breaker in yellow, our source in blue, and red is a 4-hour order block. Pink is our 1-hour order block. So we want to see price come in here. Let's see if we can add some institutional price levels around these zones. And sure as hell that this is a 500 institutional price level at the 50% of this 1-hour order block. So we can see some reaction when we close this fair value gap on the 4-hour. Notice there's a 4-hour fair value gap in the purple box, but there's also a 1-hour fair value gap over here in that small area. So if we mark that up as purple, and what price level is that? We can expect reaction from either the 800 or the 500. There's no more fair value gaps of taking. So I would say we could look for buys on EN at around the 800 and the 500, but we would want to see price first react off that zone. Don't be hasty. And yeah, so that would be one of my markups I would be looking to trade at coming on Monday. Ravi, you asked me a question. My voice is not working. I just wanted to make sure where to take a perfect entry in an order block after break OB, or can we take entry in OB? Well, you need to wait for candles to close before you can just execute a trade, Ravi. You can't just trade based off what you think is going to happen. You need to wait and be patient. Patient trader always gets paid. So like I've showed you here, we mark up the order blocks inside order blocks, inside order blocks, inside fair value gaps, inside institutional levels, and you frame up an entry for yourself and you wait for a reaction, and then you take your entry, or you put a buy limit or a sell limit at where you want to, or you set up an alert. There's apps you can get. You can use MetaTrader to set up an alert, but it's important to not just be hasty and take a trade because you think something's going to happen. You need to wait for the price action to occur before you can take your trade, or if you have a buy limit or sell limit set up. It's not too difficult to structure a trade like I've showed you. Hopefully that answers his question. Ravi, are you there? If you can say yes or no. Okay, no reply. Yes, he understands. Okay. Well, yeah, so we don't have much time left of this call. Nitesh, Anything from you?
How's it, guys? Not too long ago, you said you will make a video, or maybe you can just touch up. Sorry, communication check.
Yeah, listening.
Oh, okay. You can just touch bases on what is a propulsion order block.
That's something I can't cover right now, but basically,
Okay.
propulsion order block is an order block inside of another order block. Like if I can find one here. So we are looking for an order block inside of an order block. So here would be a good example. Here is a propulsion block where we have a 4-hour order block over here, and we have another 4-hour order block over here. Notice it takes 2 candles to create this order block over here, 2 candles over there, but that is essentially a propulsion block because you have intersection crossing over. Why it is called propulsion block is because price is propelled down. You can see price dropping from this order block and dropping again even further, pushing price lower than the previous low. So that is why it's called a propulsion block, because it is a strong movement from a particular order block to the upside or to the downside, depending on if it's bullish or bearish. But yeah, that's something I can go into great detail about in another video. But yes, a propulsion block is basically an order block inside of another order block, but with a little bit more fine tunings to delve into greater detail as to why and what to look for on a propulsion block.
Okay. Thank you for touching bases on that.
Yeah, but mostly order blocks inside order blocks on multiple time frames is really good entries. So again, here we can see that just mark this up over here. This is an order block over here on this red box, and then we can say let's look for ourselves on an entry here. And if we say that we mark up the 50% of the order block or the opening candle of the order block, we could have either been entered into both, but the stop on that would have been more than 50 pips. So that's why I sometimes take the 50%. But if we look on the 1 hour chart, we can see that there is another order block over here. Inside that one on the 30 minute, another order block and a fair value gap over there. So you can see how I'm framing up the entries and pulling price data across. So that is all you basically do. You just do a top-down markup from your high time frames to low time frames. And that's basically it. I'm going to quickly touch on the order flow on, say, a 15-minute chart, because someone asked me that question. So if we look and we say that we have marked up our order flow on a 4-hour chart to know the directional bias, we will know that this over here is our order block. We will know that over here is our institutional round number figure over here. And if we go to our daily chart, we will know that over here is our breaker on the daily chart. Okay, and we marked it up yellow. And so now we have some formulation of where price can react, and we go down to our 15-minute chart. And let's just go to that same level. So we know that we have a breaker over there, and we know that we have inside of our breaker, we have an institutional price level. Okay, so when this order block is created over here on the 4-hour, this bearish order block over there, red. And now let's go down to our 15 minutes. So we framed up our entry on the higher time frames to know which direction to trade. And now we can just trade based on the 15-minute chart. So the same can be said for a 15-minute chart. Is 15-minute chart also last bullish order block before the move to the upside becomes our breaker. So that is our 15-minute breaker over there, and price closed below it over here on this candle basically here, and we can expect a retest, which is exactly what we got over here, and price basically broke down, came back up, tested our breaker again on the 15-minute. Because we have a directional bias on the 4-hour and the daily, we know what price is doing. We're now just following the 15-minute time, the 15-minute order flow. So price just continues downwards, and something I will cover is discount and premium. But basically, we are looking for 15-minute fair value gaps, 15-minute order blocks to take trades from, and we also incorporate our institutional price levels. So as we can see, the price testing our 15-minute over here, sometimes the order blocks on the 15-minute can be quite choppy because obviously we are trading on a 15-minute time frame. But as long as you know your directional bias, you can use a higher time frame, which is the H1 time frame, and you can see the same reactions. So again, here is an order block, 1-hour order block. And basically, we just go to that order block and we continue to trade because we have a directional bias on a daily, 4-hour breaker, 4-hour order block. And now we just frame up our entries. And we can see on the 15-minute chart, fair value gap over here, order block over here. This is an order block. Price tested that order block, rallied down, probably an institutional price level at the same time. And it is 800 institutional price level. So these concepts are fractal. They are applicable to all time frames. As long as you know what is happening on the higher time frame, you can trade any time frame you want. And I learned, sorry, that's okay, it. And then Ravi, I answered your question. David, I learned from this particular Q&A, please, I hope we will receive this to Can One Trade with the M1 time frame. I guess you could trade with an M1 time frame, but that's even more choppy than a 15-minute time frame. As you can see, there's a lot of disturbance on during certain times of the day where price is doing some garbage over here. But yes, everything I've showed you can occur on the 1-minute time frame. So fair value gaps, order blocks, as long as you know the bigger time frame, you will be able to trade on any time frame. But yeah, M1 time frames a little bit too low to, unless you're quick scalping in and out, you can trade on it. And also institutional price levels, order blocks on higher time frames play a key role in any time frame, whether it's M1, M5, M15. So any time frame you can trade. The price action on the lower time frame is obviously you'll have more candles because there'll be 60 candles in a 1-minute time frame for a 1-hour candle, and that's it. Yeah, we're going to run out of time now, but hopefully this was helpful to everyone, and thanks everyone for joining. So yeah, that brings us to the end of this session, and I will see you to create another one maybe in the midweek or next weekend. So thanks everyone for the evening, and I will see you again soon. Keep well, enjoy the weekend.